how to invest on your own. If you've ever wondered, how can I invest my money? I don't want to pay someone else to do this for me. That is what we are talking about in today's video. I am Tiffany Thomas, your wealth mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. Let's dive right in. All right, if you are ready to empower yourself and invest on your own, then I want to break down the steps on how to do this, because I wanted to do the same thing. And I was even fearful to invest on my own, but I knew that if I could just give myself enough education and take the steps, just start small, but take the steps to invest my money, that I could be successful with it. So if you have those same thoughts, let's dive into these details. Because honestly, it is possible for anyone to manage their own money. Because the only time someone needs a financial advisor to invest their money for them is if they have a lot of money, if they have a large estate or multiple estates, and they have multiple businesses and just a lot of money, a really high net worth. And that would be multi-millions or even a billion. But for most of us, like I said, I am a millionaire and I manage my own money, my own investments. We can definitely do this on our own. And doing this actually isn't that hard. We can definitely do this. If I've been able to do this, you can definitely do this as well. And I know a lot of people think, oh, well, if I have a financial advisor managing my investments for me, they can make a lot higher returns. That's actually not the case. Studies that have been done have shown that a financial advisor is not outperforming someone who is investing on their own. And if you think about it, if they are outperforming what you could do, which is most likely not the case, but you are paying them a fee, they would have to outperform over that fee amount that you are paying them. And usually it's around a 1% fee, which sounds really low, but actually that adds up to thousands and even hundreds of thousands of dollars over time, because you are having them manage your investments for your entire lifetime. This isn't something that you just start and then you stop. They do it all the way until you are gone. So that is a lot of money. So I am glad that you are here for today's video. Let's talk about how to invest on your own. And I'm going to just cover the stock market today, even though I do like investing in real estate as well. But it is a lot simpler and it is more passive to invest in the stock market. So that will be our main focus. First off, we want to set our investing goal. What is it that we want to achieve by investing our money? Probably to retire or become financially free. We're going to need to figure out exactly how much we're going to need to have invested in order to retire, so we know exactly what we are working towards. And this isn't hard to figure out. We are going to use what's called the 4% rule. We will take our annual expenses in retirement, multiply that number by 25, and then that is going to give us the amount we will need to have invested. For example, if our annual expenses are $40,000, we're going to multiply that by 25, and that will give us $1 million. So we would need $1 million invested in order to retire. And if you want more detail about this 4% rule, I have another video breaking that down. I'll leave a link above. You can check it out later on. But now that we know exactly how much we need to have invested in order to retire, we want to work toward that amount. And since we are just focusing on the stock market, we want to set up our stock market account. There are a number of different accounts out there, so we want to choose at least one to get started in. Let me give you a few examples. If you have an employer and they offer a 401k, that is one account that you can set up. And I would definitely say set that up if your employer is doing a company match, and at least invest up to that company match. Another account that we can set up is a Roth IRA or a traditional IRA. You can invest up to $6,500 per year. So this is not a large amount, but it will give you something to start with. And if you are deciding between a Roth IRA and a traditional IRA, let me give you a few differences. With a Roth IRA, you are going to put money in there that has already been taxed, and then you're going to pull that money out tax-free. One nice benefit of a Roth IRA is that you can pull out your contributions, any money you have put in at any time. So this gives you some flexibility. Otherwise, with a traditional IRA, you are going to have a tax break up front, so you aren't going to pay taxes on the money you're putting in. And then when you pull that money out, you will pay taxes on that money. And if you want more details about these two accounts, I have another video. I will leave a link above. You can check that out later on. And if you do own your own business, then there are other accounts that you can set up. And I am not going to go into detail about those in this video. I have another video. You can check that out later on as well. And then one other account account that I want to talk about is a taxable brokerage account, and anyone can invest in this account as long as you're 18 or over. And you can invest as much money as you want to. There is no limit on the amount that you can invest, like with a Roth or a traditional IRA or even your 401k or a Roth 401k. But with a taxable brokerage account, since it's called a taxable brokerage account, you are going to pay taxes when you pull that money out and also on any dividends that you are receiving. And if you want more detail about the taxable brokerage account, I will leave a link above to a video I did breaking this all down for you. Okay, so once we have selected our investment account and we have opened that up, and I personally like using Vanguard. They have been around for a really long time. They have really low fees, really good funds, so that is where I would personally start. But nonetheless, you can pick whatever brokerage firm you want to and open up that account. And then once your account is open, we need to transfer money from your checking account over to your investment account, and then we want to select our investment. We don't want it just sitting in cash inside of our investment account. And there are a number of different investments we can choose within the stock market. And if we just want to start very simply, we can start with what's called an index fund. And this means that one single fund has a whole bunch of companies inside of it, or if it's a bond fund, it would have a whole bunch of bonds inside of it. Or there are even index funds that have stocks and bonds inside of just one fund. There is also what is called an ETF, an exchange traded fund. And this one is easier to get started in because you don't have to have as much money as you would sometimes with an index fund. With an index fund, especially with Vanguard funds, it's a $3,000 minimum to get started in that fund. But with an ETF, it's just the price of the ETF, which could be around maybe $200. So it's a lot less to get started with an ETF. But it's very similar in the fact that it is tracking something else. It's tracking an index like an index fund is. And going back to the index fund, like I said, it's tracking something else. It could be tracking the S&P 500 or the US total stock market. There's a number of different index funds out there. And if you want to know what my favorite is, I have another video. I'll leave a link above. Or if you don't want to get started with an index fund or an ETF, maybe you have a few companies that you really love that you want to start investing in, then you can definitely buy individual companies, individual stocks. For example, if you really love Amazon, then you can just invest in Amazon stock. Or if you really love Tesla, then you can just buy shares of Tesla stock. And since we are investing on our own, we get to choose which investments we want to make, which might sound a little daunting, but it is really nice that we have that opportunity to choose exactly what we are investing in. So once we have our investment account open and we know what we are investing in inside of our investment account, the next step we can take is to automate our investing, which is pretty amazing. We can be very hands-off with our investing and make sure that our investing still gets done. This is what I've chosen to do. I have an automatic transfer from my checking into my investment account directly into my index fund that I like investing in. So I don't have to think about this every single month. And the index fund I have chosen to invest in, I feel pretty secure with that index fund that it is going to grow over the long term. So I'm not too worried about what it is doing in the short term. With my individual companies that I own, my individual stocks, I like to keep an eye on those stocks because it's a little more risky to be investing in individual stocks. I don't want the company to go bankrupt because then I will lose that entire investment. For example, if I just have all of my money inside of Amazon and something really bad happens and they go out of business, then I'm going to lose all of my money. But if I am diversified, if I have about 10 different individual stocks and then I have my index fund and one of my individual stocks goes out of business, then I just lose that amount. But since I'm diversified, I'm not losing all of my money. And going along with this, we want to make sure that we are investing according to our risk tolerance. We don't want to be too risky and be too nervous and sell our investments at the wrong time. But we want to have enough risk that we are going to make the money that we want to be making. And if this does sound a little too overwhelming still, I actually help people invest in the stock market. I have a free masterclass where I go over how I can help you do that. I can help you open your investment accounts, choose your investments, and even automate your investing, and we figure out your financial freedom number together. So definitely check out that free masterclass. I will leave a link below in the description. And just as a side note, I am really glad that I decided to invest my money on my own because I don't want to be paying someone else to do this for my entire life. I actually went to a luau recently and a lot of older couples were there, and I was talking to one couple in particular, and I told her that I do financial coaching, and she had asked if I do that for people that are retired, and she had mentioned she doesn't know anything about her finances. She doesn't know what investments they have or even what bills they are paying. The husband takes care of all of that, and if he passes away, she is going to be in a lot of trouble. So I am just really grateful that I have taken the time now to understand these things, to be better with my money, to learn to invest it and actually invest my money. Because when I get older, all of these things are already going to be in place and I'm going to understand everything. So I won't be relying on someone else to take care of all of these things for me, which can be pretty scary because sometimes we don't really know who to trust. All right, comment below and tell me if you are going to invest on your own. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit the little bell to get notified on when I post new videos. And if you want to see even more great content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.